So I think the value in having mentorships is figuring out, can I pay someone for their skills, expertise, and experience to accelerate my goals to make this happen in a lot better fashion? This is Greg Cullen with Leverage Hustle here today with Dennis and Val. Super excited to be mentoring these two really aspiring real estate investors starting out. I know they're super involved in the Bigger Pockets community as well. So excited for the questions we have today. Before we jump in, Dennis, Val, would love to hear a brief introduction of yourselves and why you want to get into real estate too.
Hell of an intro, Greg. I'll start with the missus.
Yes, I'm Valentina. Dennis and I live in Miami, Florida, and I feel like this is really the spot when it comes to real estate. I've been around real estate my whole life. My mom's a real estate agent, and I feel like, we have to get into it at some point. So it's really just, what do we do? How do we get started? So excited today.
Definitely. Dennis, the other half. After talking with you, Greg, I've figured out that, this is something that we have to get involved in, want to start building wealth in real estate. I mean, I forget the stat, but it's something like, I don't know, like 4 out of 5 millionaires all have real estate in their portfolio. And, that's just something that I want to start building, right? We've kind of got different investments and, real estate needs to be a bigger part of that. And I know that's a good wealth generating business over time. And so it's just something that I feel like, now is the time to get started.
Yeah, it's exciting. Well, I know you have a lot of questions today. Let's jump into it.
Sure. All right. So starting off, just as a complete rookie, which we kind of are, trying to figure out how do you get started? How do you build knowledge? Where do you build knowledge? I think has kind of been one of the issues that we've been coming across. And just I know there's a ton of resources out there, but it's almost like, how do you cut through the noise and get to, the actual information that's going to be helpful? So would love to just understand from your perspective, maybe how you got started and how do you cut through the noise and find the valuable information?
For sure. Yeah, that's a good question. I feel like there's so many resources available to a new real estate investor that it can be somewhat overwhelming at points in time. And you're probably feeling that way too. I mean, you have Bigger Pockets, you have all these books, you have different social media influencers, and each channel is unique for itself. So for me personally, when I got started, I had to do an hour drive every day to work when I was in college. And so for me, it was easy to pop in a Bigger Pockets podcast and just completely blow through all the episodes, like 2 hours a day, Bigger Pockets, and digest that super quick. Now being work from home, that doesn't really happen too often, but it's kind of mixing and matching.
But when you got started, did you have any type of mentor or somebody kind of guiding you through and telling you, what to avoid or avenues to look at? Or
yeah, it's a good question. So I actually didn't have a mentor, and looking back, I kind of wish I did. Right. So I think the value in having mentorships is figuring out, can I pay someone for their skills, expertise, and experience to accelerate my goals to make this happen in a lot better fashion?
Yeah. And I think it's also super unique. You are leveraging a lot of free resources. And so I think one big thing for us is obviously we can listen to all the podcasts and read all the books, but, when you were first starting off your journey, when it came to real estate, how did you know what avenue to pick?
Are you asking in the sense of the avenue of what type of real estate and how to do that?
Exactly.
Long-term rentals for me make the most sense because I can have predictable cash flow. I can scope out and vet my own tenants at the end of the day and really make sure that this is a low stress investment. That being said, I also have an Airbnb in Maui, which for the most part is somewhat easy to work with, but it's still like a customer service job. Those are great, but it's a very active form of real estate. So you're going to be taxed very heavily on it. And it's just a constantly revolving door of get a property, sell it, get a property, sell it, get a property, sell it. You could also do wholesaling. Wholesaling is a very easy way to get into real estate where you're not putting any money in generally, and you're just getting these contracts and assign them to a willing and able buyer. So there's so many different flavors of real estate, even medium-term investing. You'll go on Furnish Finder and find stays for 30 to 60 days for traveling nurses and things like that. It depends on what you want to get into.
Got it. Okay. And so speaking of cash on cash return, just as you think about, your investments, be helpful. I have somewhat of an understanding of cash on cash return, but it'd be great to hear from you kind of what that actually means. And then what type of cash on cash return do you look for when you're making your investments?
Yeah, it's a good question. So cash on cash return at the end of the day, The best way to calculate cash on cash return is going to be when you're looking at a property, figure out what your monthly PITI is on that property. Also figure out the market rents. The difference will be your annual net cash flow. Take that number, times it by 12, annualize it. And with that annualized number, divide that by the total amount of money put into a property. That's your down payment, closing costs, renovations, everything. Pretty easy calculation to figure out. A lot of other folks will use like IRR or other type of ratios. Those are totally fine. I think IRR just calculates in equity pay down, calculates in appreciation, some depreciation as well. But I mean, that's a holistic number. Cash on cash return is really what puts food on the table. So that's my go-to for everything for residential real estate. Now, if you're thinking of a good return, it varies in each market, and especially now with the interest rates where they're at. So I think of it in terms of like a baseball game. If I can hit consistently a double to get on base, that's what I'm shooting for. Now, a double for me is probably going to be 8 to 12% cash on cash return, and it'll scale up from there. I've gotten a grand slam where I got about 40% cash on cash return, and I think that's a great deal. But you're not going to be able to find the 40 to 60% cash on cash returns every day of the week. The doubles, that 8 to 12%, that's a super easy way to get into real estate, and it helps you avoid the analysis paralysis. It's figuring out what makes a good number for you, and can we jump into it?
Right. Okay. Yeah, and analysis paralysis is definitely something that I feel like I struggle with personally. I mean, there's so many options. There's so many different avenues to go. You don't want to mess up, especially on your first time, right? Yeah. You always hear the horror stories. I don't know if you struggled with this at all, but like if you did, like how did you kind of overcome your analysis paralysis? Was it just, getting the numbers right and you just kind of make the jump, or was there something else to it? Did somebody push you? Like what would that look like? Yeah,
I always tell people the worst thing in real estate is vacancy. The worst thing in real estate is going to be analysis paralysis. So like starting out, like you're going to be so overwhelmed with the idea of jumping in until you get your first one. And then you're like, oh, this makes sense. This is easy to do. So I did have analysis paralysis at one point when I was starting out. And it's very intimidating because you don't know what could go wrong. And it's a very fearful mindset. But you always have to think what could go right too. The best thing to do with analysis paralysis is just make sure you run your numbers as conservatively as possible. Run them again, run them a couple more times too. A lot of these things won't change. Your interest rate is not going to change once you get that locked in. Your property taxes will generally go up over time, as well as your home insurance. But as you're looking at some of these renovations, it's just being very conservative with what those renovations could be, or even your market rent. And if you're able to, at that point in time, have that conservative approach, you're going to be fine at the end of the day. And the best thing that could happen is you were so ultra conservative that your cash on cash return will go way up.
So I know you mentioned running the numbers. What do you use to run these numbers? Do you rely on a calculator? Did you create your own calculator? What does that look like?
Yeah, so I probably did things the absolute wrong way and the long ass, like hitting your head against the wall way. So the way I do it is very, I mean, sometimes it works, but at some point I'm going to push out my own calculator because I think most people are asking the same questions. Yeah. If you want to do it the long and painful way, like how I do it, I'll get the Zillow calculator. You can find it online. Just type in Zillow calculator. You'll figure out the property you want. You can put in your purchase price there, your estimated interest rate, add in your insurance, add in everything else that might have some applicableness, maybe even HOA as needed. But you'll have your PITI number right there. From there, you're also going to go on to, say, Zillow or Realtor.com, figure out what your market rents are for those type of homes in that specific area. Generally keep it to the same neighborhood, and if it's not in the neighborhood, keep it maybe a mile or 2 miles away, just so you have a good area of comps to look at. Mm-hmm. And then from there, you're going to have your market rates for your rentals, and then you can also have your PITI. Great way to just figure out what those two look like. You can also use a website called rentometer.com. Rentometer is a great way of just typing in the amount of beds, baths in the area, as well as that zip code to figure out if you're priced right or wrong. Now, sometimes that is accurate. Other times it gives you an approximation. Zillow is going to be the best way to figure out what those market rates look like for you and if it's going to be worth it at the end of the day.
Yeah. So thank you for that explanation. Digging a little bit deeper, so that's how you analyze the property itself. Thinking about demand for whether it's any type of rental property, short-term, medium-term, long-term, how do you, I guess, assess demand? Are you looking at census information? Like what types of data do you look at to say this is the right area? Outside of the housing, the numbers work. How do you know that this is the right area?
Yeah, good question. So I think it depends, and depends on each market too. So in all the markets that I play in, there's a lot of commercial growth going on too. And when I say commercial growth, I'm not just saying like maybe local schools, but it could be new roads being built, new highways. They might have, you're probably going to hate me saying this, but like new Olive Gardens or Chick-fil-A's, just commercial development in general. Something where there's so much demand coming anyways that they're building all these commercial properties around to accommodate all those new people. You can find a property that needs to be, say, value added, a distressed property in the area, and take advantage of that growth happening. That's perfect. I'll also do a lot of driving by to figure out, as I'm looking at some of these properties, am I buying the nicest house on the street, or am I buying potentially the shittiest looking house? Ideally, I'm looking for the shittiest house. And you've probably heard this from Bigger Pockets plenty, but I'm making sure that I'm not getting a house that looks too far out of the ordinary, that's not completely redone. I want a house that you can walk into and maybe say like, have all these bad smells coming at you, or like holes punched in the wall, blue tarp roofs, green pools, like that. As soon as you walk in, I've seen them before. I'm like, this is what I'm looking for. This is incredible. So it just depends. Now, if you don't have the time or the ability or even the desire to deal with a massive renovation, totally fine. You can get into some of these properties with little to no renovations and still hit those doubles like what I was telling you before. It just depends on what you're willing to put up with. And I think
on that spectrum of shittiness that you're talking about, like what is the right level of shitty where you're like not too shitty, but
how much shit do we want to handle?
Exactly.
Yeah. Well, it just, how much shit you want to handle. Yeah, that's a great question. And I think only one as yourself can figure out how much shit that you actually want to deal with. Be stressful, especially when you're trying to get this place rent out as fast as possible. But that's part of the game. It's making sure that you can manage that shit that comes with it. Now, only you can figure out how much shit that you want to put up with. I deal with shit from Orlando, Austin, and Maui, where I had, even in Maui, a renovation that should have taken 2 weeks, turned into 2.5 months. And at that point in time, you can't really see it on this webcam, but I have like gray hairs specifically from Maui. A lot of value to doing that yourself starting out. So I'd say keep that in mind when you're evaluating the shit meter along the way.
Love it.
Totally. And then I know you mentioned you also have property in Hawaii. So I'm curious to know, how do you know which cities are good cities to invest in? I mean, obviously you do market analysis and whatnot, but I mean, Hawaii is pretty far from Orlando. So how did you make that move?
Yeah, so Hawaii was a very interesting place to invest in. So this was my second partner deal that I did, and it's my best one. Like I love the guy I do this with. His name's Alex. He is my best buddy of like 15 years. And I'm so glad we did this because I had a bad experience with partnerships, and then this just completely revitalized what that looks like for me. So he actually wanted to invest in Maui because he proposed to his fiance there. And during the proposal at Mama's Fish House, he, like, right across the table was Brandon Turner from Bigger Pockets. And so as he was proposing, like, he saw Beardy Brandon, like, sitting to the side and was like, oh,
that's
shit.
A sign.
Like,
right?
This is the sign. We looked at Maui, we looked at Key West, we looked at the mountains, a little bit of everything. Mm-hmm. Now, it wasn't until he sent me probably five to 10 deal analyses based in Maui where I could see that he was actually running these numbers appropriately. He was using the BP deal analysis calculator. Again, not an employee of Bigger Pockets or getting kickbacks, but like he used it and he found a lot of good value in it. But 1 week later, I was like, I found a property. If you're going to do it, this is the one we're doing. It's in the best area. It's zoned properly for Airbnbs. This has a lot of upside. You're going to get about a 20% cash on cash return at the bare minimum. I looked at a lot of places for this Airbnb of where are people vacationing, where can we get the best cash on cash return, and really where we're going to have the best support in terms of whether it's contractors or making sure that, you know, we would have a good time there.